I want to welcome you today as we are going through the complexities of the financial world together. Now, this is something that we will be talking about three different areas. First of all, we're going to be diving into the economic and stock market risks. Then we'll be talking about ways to adjust your portfolio. And then lastly, we'll be talking about some advanced planning and some ways you can actually be creating a better wealth plan for yourself. So let's dive in. The first section that we'll be focusing on is economic and stock market risks. Now, recent events have really reminded us of the intricate web that connects the global economy, and the recent fire at the third largest U.S. refinery in Louisiana is a stark example of how unexpected occurrences can send ripples across the markets. So this is really underscoring why we place such an importance on diversification and the crucial elements in your financial plan. Now, what we want to do is really monitor and adapt our investment strategies here, and this will serve as a way to really rein in all of that uncertainties and really try to make sure that we are diversified and that we are invested appropriately for any risks that could potentially crop up. Now, as a piece of that, let's talk about some economic decisions that are happening in real time. Last week, the Federal Reserve really stepped forth with Jerome Powell's recent speech, and this was at Jackson Hole, and really did is set the future for interest rates. Now, what the Fed's cautious approach did was seek to strike a balance between fostering economic growth and taming inflation. Now, this balance is a cornerstone basically of not only their strategy for what's working, but also the things that we are looking at as well. And we believe that carefully navigating what the Federal Reserve is doing and all of these monetary shifts is going to be a key to safeguarding your financial stability and all of the wealth planning that we're doing. So the market's reaction to what Powell's speech was really nothing short but fascinating as well. And we saw a significant downturn before the speech, followed by a modest upturn right afterwards. And what this does is serve as a testament that the market's sensitivity to the central banks, what their communication styling is really heightened. And this also reiterates our higher for longer theme and outlook for interest rates. Now, again, the Federal Reserve left the door open for further interest rate hikes in the future, in the months to come here. And what we want to do is work that into your portfolios. And we're looking to really interpret these movements in making adjustments to your portfolio that's going to match your goals and what you want. Now, that is exactly what all of the turbulence with the volatility in the stock market is talking about here, that there's a lot going on, and the better we work with the investments, the higher probability that this will translate into a better wealth plan in the future. Let's talk about that second piece, portfolio changes. So we know that there are some risks out there, but let's turn our attention to your portfolio. And last week we had talked about reaching our downside target of 4,350 on the S&P 500. So yes, we did reach that, and now the markets have rebounded a little bit, and right now we must recognize that volatility is picking up. So last week's market fluctuations around Powell's speech really underscore this fact, and we stand at this crossroads now. So there are really two paths that are coming out here and starting to emerge. Should the markets take more of a downward turn from here and going below that 3550 level, we actually do expect a heightened level of volatility and more selling to come. So that's going to really keep us below that mark and possibly open the door for closer to 4,000 on the S&P 500. So maybe even another 7-8% down from here. So this is where the strategic approach really comes into play. And we have been using things like structured notes to provide some stability in your portfolios that are different than bonds. You see, when bonds are not the stabilizing force that they're supposed to be, structured notes can provide that alternative for you, and they can provide great sources of income with some downside protection. Now, there's other areas that we've been looking at to safeguard portfolios and have some growth. Well, we can actually be invested in the US dollar, and since that is strengthening right now against other currencies, that may be a good investment for you to take a look at. Well, there are other investments as well, including energy and ones that are tied to inflation, because what we are seeing is inflation is starting to pick back up, and even Jay Powell at the Federal Reserve started to highlight that with his language that he was talking about in Jackson Hole. Well, beyond the US stock markets, there are actually other opportunities out there that we can actually grow the accounts. So one of the different areas here that we've been looking at is Japan. Well, recently India has started to be a great course, and some areas in Latin America which are tied to the energy. So there's, again, some promising areas that we can be looking at for signs of growth and can actually be there to prevent some of the slowdowns with what inflation is doing, and they can offer a chance to diversify your portfolio just away from the S&P 500 and the US. So that is what we've been working on, in ways that you could actually take a look at your own personal portfolio for some different ideas on how to protect and grow in this turbulent time. The third area of focus: wealth management and advanced planning. As I've been sharing, we have some exciting news about our wealth management and advanced planning services. We are thrilled to announce the launch of a new service dedicated to your non-retirement accounts, the ones that are taxable on a yearly basis. Now, what this does is the service will help boost the growth of your non-retirement investments while effectively managing risk and taxes. So we call this Tax Alpha. And conceptually, here's how we work with it. Your non-retirement accounts become too concentrated sometimes in a few positions. So recently, take NVIDIA for an example. It has grown substantially, and maybe it's becoming too concentrated in your portfolios. Now, you will owe tax on that if you sell it. And that tax really is when we try to make changes here. So if we do this correctly, the new service will actually offset the capital gains, say with NVIDIA, with capital losses in other areas. And now what we are able to do is grow your accounts while maintaining tax diversification and diversification among all of the other investments there. Now, all of this can be done with a minimizing of taxes or potentially having no tax owed. Now, this is a stark contrast to many other different investments and ways that you've been looking at that just says to sell off your investments, pay the tax, and move on. That's not what we want to do here. We want to match up capital losses with capital gains on an ongoing daily basis. And to do that, we can actually reduce your risk, reduce your taxes, and potentially increase your returns. And that brings us to our second opinion service. Now, what our second opinion service is a way that you could benefit from a professional review and find any gaps that exist in your wealth plan. So this is where we take a look at where you're at today, where you want to go in the future, and then seeing if there are any gaps in the plan to get you there. Now, we're here to support your financial well-being, and we want to continue this journey together as well. So we invite you to connect with us for a personalized consultation. And like I said, that is what we call the second opinion review. So this is giving you a second opinion on what you already are doing. And whether you seek insights on your investments, reassurance regarding your portfolio adjustments, or you want a conversation about your overall wealth planning stages in the different advanced planning that you're doing, we're here to dedicate our time and guidance that you deserve so that you can have the informed decisions to move forward.